What is the fundamental rationale to Bitcoin's surge, and what method would you apply to valuing crypto assets?
Bitcoin has been quite the tale. You've seen, I think, in the last couple of months, there has been a major pivot. You've had, a few years ago when we had that first rally, all the way to almost 20,000. That was mostly retail interest. Well, in these past couple of months, the pivot was not all the major institutional players, but a lot of the big ones that were opponents of Bitcoin have turned an about face, and now they're pitching Bitcoin, they're pitching cryptos. J.P. Morgan, their CEO Jamie Dimon, a few years ago was saying Bitcoin is a fraud, and he was threatening to fire people if they entertained the idea of buying Bitcoin. And now they're targeting a move all the way up to 146,000 for one Bitcoin. I think you've seen lots of respected investors um, kind of jump on the crypto trade, and there's just too much institutional interest. And what's really provided, I think, this accelerated move higher is there has been a liquidity crunch. We've seen Bitcoin, for the most part, has really benefited from that finite supply. There's only 21 million Bitcoins out there, and there's only a few million left to be mined. And what you're going to see is that there is just too much demand right now from the institutional side and a limited supply available. And that's why we've seen these accelerated moves higher. So Bitcoin is really an example of how you can really have a strong momentum trade here, because you're having all these institutional and hedge funds kind of just pile into this, and that's why we have these exaggerated moves. But with that comes volatility, and that's why we've seen some tremendous waves of profit taking that have taken things easily like 10 to 20% in just a matter of hours.